My name is James Mason with Transparent Traders, when what you need to know as a trader is how to be a successful trader. And in this short video, I'm going to teach you just that. So forget everything that you've ever learned from any internet trader, their program, especially if you're not successful already. I'm going to show you how it's done, and I will take the most extreme approach by not using any stop losses, because our position size will be controlled, and that's what it comes down to. So pay attention to this plan, paper trade it first so you can see this strategy firsthand, and let me know in the comments once you do, and let me know about your experiences with it in the future. Now, before we go any further, for this scenario, we're going to be talking in the context of swing trading, just to simplify this video. You can do this with day trading, but if you're not an experienced day trader, then it will probably be a little bit more challenging. Also, you can do this with options as well. But again, just like day trading, you need to have that experience level to do that more advanced type of stuff. With shares, you can keep these shares forever, and you don't have to worry about time decay, unlike options. So here we are. Let's get into it. And again, this strategy works. You can be the worst trader in the world, and you'll probably still be successful 80% of the time. This is ticker CETX, and this is the daily chart. I'm going to intentionally make a bad entry here. I do know that this pulls back because I traded this. I traded it in the run up here, and I traded it in the run up later. But I'm going to make a bad entry here just to prove this strategy works. Hypothetically, let's say that our trading account is only $1,000. You never want to make your entry with your entire account. You will always lose, and you won't last long in this industry. So what we're going to do, we're going to break up our entire position that we intend to have here, or however much money you plan to trade. We're going to divide that by 10. So each entry would be a max of $100. Now, the whole purpose is not to make 10 entries. We would rather do that, with the least amount of entries possible. So if we become profitable or breaking even around entry number 3, 4, 5, 6, that's cool. Once we become profitable, we're going to let it ride and save that rest of that capital just in case if we get into a bad situation. So here we are. I'm going to make my first entry. I'm going to make an entry with 50 shares. So 50 shares, my average price, $2.20. I'm going to skip 2 days ahead. Obviously, during real time, you would see how this trade would play out as the days went on. So let's skip ahead. Now that we're 2 days ahead, you can see that I'm down $15 right here. My average is $2.20, and the current PPS value is $1.89. So I'm controlling this trade by my position size. Now I'm going to scale in or average down, depending on whatever you want to call it. So making my second entry, 100 shares now total. New average, $2.05. We're going to skip ahead now. Now you can see I am in the red by $29. And that's okay. Again, we've only made 2 entries here. We still have plenty of capital to work out in this trade. On this daily chart, it is looking like these daily candles are forming a support, but you don't ever know what the stock market is going to give you. It doesn't matter how great your technical analysis is. The stock market will humble you and give you surprises that you would never expect to happen. So we're going to go ahead and make our third entry since we're still in the red, and we're still controlling this entire trade by keeping a small position. Third entry, 150 shares now total. New average, $1.95. Now we can see we're kind of going sideways. My P&L is minus $26, and these daily candlesticks, they still are looking like it's forming a support. But again, you don't know what the market will give you. So we will make another entry here, and we're still controlling our trade. But this thing could go against us. Just keep that in mind. So adding another 50 shares here. This is now our fourth entry. Our new average, $1.91. And let's skip ahead. Now, if you look at this, we are just breaking even. We have just a little bit of profit, and that's cool. That's where we want to be. There's no need for us to average in anymore. We're going to let this thing ride out. We're going to see what it does, because we still have the rest of our capital to bail us out of this trade if it gets too bad. On this daily chart, this does still appear to be a bottom, but we did have this nice gap up, and you never know, we could just drop. So let's see what happens. We now have a profit of $34. This is starting to turn out pretty good in our favor. Looking at this daily chart, we can see, looking at it with hindsight, we can see that was a support, and it actually did hold, and we are now getting this bullish momentum coming back up. But we need to see what's going to happen in here. Last time this acted like a resistance. We need to see if we're going to get rejected here, or if it's going to break above that. If we break above that, that's what we want, and that's when we'll know that we're in the range to actually sell in our profit zone. So let's skip ahead. Now we see that we have a profit of $74, and things are looking pretty good now. What I would do at this point, since I have a decent amount of profit, is I would put my stop loss in at $1.91. That way, if this thing would drop against us, we ain't gonna waste money. We'll just waste time, and that's okay. We want to give this some room to work out, and then, if it would go against us, we'll just find another trade. It's no big deal. But that's the key here. You have to give your trade some room to work. So our stop would be 191. We're going to see what it does here, what I would expect on this daily chart. Since this daily candle is red, we're breaking above this high, but it's one to still act like a resistance. So let's see if this thing pulls back. And what happens a lot of time is it will pull back and then make one last run, and that's usually the top. So let's skip ahead right here. Okay, so you can see with our P&L, we're going sideways. That's still okay. We wouldn't have triggered our stop loss, so we're good there. On this daily chart, it's consolidating. We're still kind of dancing around this high right here, and now we want to see next what it's going to do. We don't know if it's going to drop, get rejected in this range, or if we're going to consolidate right here and then make another run up, which will probably be the top, and that's where we will sell, or near the top, just depending. Let's skip ahead. Now you can see on this daily chart that we had a strong bullish day right here and then a gap up. So we did break above this high, and this is exactly what we wanted to see. We had our stop loss in at our average price. We were protected there. This is the range where I would absolutely take profits if I was still in this thing. This is probably going to be the top. Our profit now is $217. We have 200 shares with an average of $1.91. So we have $382 in this trade, and this profit right now at $223. Just think about that. We're only scaled in with 4 entries here. This is exactly how you use this strategy. And if you use this strategy just like this, your success rate will increase tremendously, and this will determine everything in your trading career moving forward. Keep that in mind. Let me know in the comments what you think about this and how you perform using this strategy in the future.